Talk to me first about the loan loss provisions and the hit, really, that you've taken due to COVID for the quarter.
First, our pre-provision profits for the first half of the year were some £5 billion, which is about 27% over what we earned last year. And then as you look at the economic response to the COVID-19 pandemic, clearly there's been an extraordinary economic contraction globally, but particularly in the U.S. and in the UK, our two principal markets. We've taken a sizable impairment reserve, £3.6 billion for the first half, including the £1.6 billion in the second quarter. The vast majority of that are derived by our risk models, where we put economic forecasts into those models, future unemployment rates, future GDP rates, spend growth, et cetera. And those models produce those impairment numbers. And we think we have been conservative to build proper impairment reserves. Let's see how the economies, particularly in the UK and the US, unfold in the next couple of quarters. But we like the comfort of having strong impairment numbers, but yet at the same time maintaining profitability for the bank.
Jes, good morning. I'm looking at your investment banking business. Absolute massive beats really across the board. Fixed income up 60%. The estimate was 30%. Equities trading up 30%. Estimate was 3%. The question is, could Barclays keep this up?
We've had, I think, very good performance in our markets business over the last couple of years, and clearly in the last couple of quarters. I think, like all the banks that have reported thus far have commented on, the volatility in the first two quarters were quite exceptional this year. And I think people are expecting a degree of normalization. But as you mentioned, with our fixed income, credit, and currency trading up 60% for the second quarter, then up 80% for the first half year overall, I think we're gaining market share. We want to stay open and available for our buy-side clients, the insurance companies, pension funds, et cetera, that underscore the capital markets. But I'd also say that I think what we're seeing is, in part, the result of a lot of regulatory changes over the last decade. If you go back to the crisis of 2008, 2009, it was really based on bank balance sheets getting into trouble. What I think governments have properly done is they've really moved the focus of financing economic growth from banks to the capital markets, to companies issuing debt and equity, and to firms like pension funds and mutual funds buying those securities. That's really the story, I think, of the first and second quarter, is the resurgence of the capital markets led by massive amounts of liquidity provided by central banks. And I think that has proved to be a fairly constructive response to the pandemic and the consequential economic crisis.
Yeah, I was talking with Claudia Buch, Jess, last week from the FSB. They put together the too big to fail regulatory recommendations, and it seems like, at least in one sense, they have saved the global financial system, because you don't see the weakness this time that you did a decade ago. And that, which I think is especially amazing, with most of your employees working from home, how is that going? You hand in these incredible investment bank results with a lot of your women and men working from home. How is that going, and how long will that continue? I mean, if you can do this well with everybody working from home, you may as well sell that office.
No. Well, first, let me say, to your point about the strength of banks and Barclays in particular, to your point, I think, given the adjustments that the financial industry has made since the crisis and the strength of the positions we had coming into this crisis, we printed the highest level of capital to risk-weighted assets at the end of June at 14.2% in the history of the bank. And I think that enables someone like Barclays to become a firewall in this crisis of 2020, as opposed to part of the problem 10 years ago. In terms of people working from home, it is extraordinary. We have some 60,000 people working from their kitchen tables, that we had the technology, the systems, the controls, the compliance to do all that. is quite something. But I should also add, we have 20,000 people in the UK that are actually working from offices. They're working from our branches. They're working from our call centers. And we expect and want to get in a prudent time schedule, taking care of the health and well-being of our employees. It is important to get people back together in physical concentrations. We need to do it considering the pandemic, but we also have a responsibility to places like Canary Wharf, like Manchester, like Glasgow. So we've learned a lot through this dynamic work environment. I'm sure we'll use a lot of the things that we have learned going forward. But also, we want our people back together to make sure we ensure the evolution of our culture and our controls. And I think that will happen over time.
Jess, speaking of culture, a lot of companies are coming out and talking about how they're going to be more inclusive and more diverse, especially as corporations in America really start to look at systemic racism. Moody's says that Lloyd's ethnic diversity plan is credit positive. They're actually rating the bank based on that plan. What have you learned in these recent times, and what are Barclays' plans?
You know, we made a very significant statement at the end of the year around our approach to climate change, a commitment by the bank to be net zero by 2050. We've clearly elevated the whole environment and social agenda. And then I think, like all of us, quite hit by the race challenges in the U.S. in particular over the last couple of months. And I do think in the program of inclusion and diversity, we have to take a special look at race. The challenge of our black professionals around the world is something that we need to be keenly focused on. We need to move away from statements and get into constructive measures going forward. And that's what we're committed and dedicated to do. And we've made a number of organizational changes and set out a number of programs to really move the race issue forward at Barclays. We were all really shocked by what happened, and I do think society needs to respond robustly.
I actually have to say, Jess, you have been on the forefront. You were one of the first bank executives that I heard talking about diversity and inclusion, you know, at your previous employer maybe 10 years ago on Wall Street. But a lot of people talk about this issue without giving metrics, without giving us numbers to look at here in terms of, you know, ways to measure progress. Do you have any goals set out in terms of, for example, boosting your black and brown employment and pay levels?
We clearly have metrics, particularly in the UK. You know, you have to publish quite a lot of your numbers around, you know, pay gaps for gender or pay gaps for ethnicity. So there are numbers, there are goals that we set for ourselves. But also, I think what we really have to do is to make sure we're focused on the culture and on the values of the bank and on our efforts to make our employees feel safe and comfortable and welcome inside the walls of Barclays. And that's what we're committed to do. I think there is a special challenge we have for black professionals and dealing with racism overall. And that's what we want to rededicate ourselves to going forward.
Yeah, Jess, and we certainly will be looking out for anything you put out regarding diversity at the company. I wanted to ask you about the dividend. I know the report says you'll have discussions about it towards the end of the year, but are you talking to the regulator about bringing the dividend back?
You know, I think what we have all settled on, and I think the decision around the dividend earlier on in this year, given the enormous economic uncertainty we all faced, is understandable. We don't know what the second half is ultimately going to mean for the economies and for the bank itself. I think the current program to move out to the fourth quarter of 2020, discussions about dividend payments in 2021 is prudent. And so we'll have those discussions with our board, first and foremost, but then also with our regulators. So I think we're going to leave it to towards the end of the year to try to make a determination as to reinstating our dividends next year or not.
Let me finally ask you about the future of retail banking in the UK, Jess. What changes do you see given the tectonic shift of the pandemic? How does retail banking in the UK look with such an unprofitable, future?
Yeah, so one of the things I think we need to remind ourselves, this time last year, our consumer bank, or retail bank in the UK, was on its way to generating a 17% return on capital, which it did in 2019. We've been hit by an extraordinary pandemic and economic contraction. We've given payment holidays to 600,000 consumers across the UK. We've waived overdraft interest for all of our consumers and small businesses. We've done a lot to help the consumer. And we've passed through £21 billion of credit support by the government to small businesses and to mid-corporates. So we're doing our part to help the economy recover. I would say that I think this has accelerated the move to digital finance. People are using much less cash. They are much more focused on using their debit card and their credit card. That's a positive evolution for the UK retail banking industry. But we bank literally 50% of the adult population in the UK. So it's a critically important business for us. Let's get through this pandemic and the economic crisis that has followed us. But we need to remember that fundamentally, going into this crisis, this was quite a profitable business.
Jes Staley, thank you so much for joining us. The CEO of Barclays, Jes Staley.